All right, guys. Good morning. Good morning. Good morning. Do a quick sound check here in the Essentials room, and then a quick sound check on YouTube. All right, good on YouTube, and G to G in the Essentials room. All right, guys. Well, I'm fresh off the 31st birthday, so we'll see if this is a year that I mature a little bit and start to act like an adult. I wouldn't bank on it. I wouldn't call that a high probability trade. But all right, guys, got a few things on the agenda. So I've got my daily S&P futures trade going. So my daily goal right now for the ES is about $1,000 per day. So I'll show you what I'm working there, and then I got to show you some of the squeeze action. We're getting a lot of nested squeezes. The weekly, the 3-day, the 2-day, the daily, and they just so happen to be in a lot of the big boys, the S&Ps, the Qs, the Teslas. And then speaking of Teslas, we got earnings tonight. So Tesla and Netflix will kick off the party. And then for those of y'all in the mastery, we should, keyword being should, get filled on the exit orders here at the open for our condors. And I'm thinking today during our live session, we'll probably jump right into another one. Kind of avoid having to wait till Friday. And then as always, folks, you have any chart requests, anything you want to look at, throw it on at me and I'll put it on the watch list here. But all right, as far as the futures trade, so woke up this morning, we had the hourly squeeze here. Momentum under the 0 line. I'm missing a couple of tools here. Hang tight, guys. 1 second. I don't have my instrument panel. ThinkScript Study T. How can I take flight without my instruments? All right, that should be it. All right, there we go. Now I got my bearings. So yeah, hourly squeeze. Momentum under the 0 line. Structure, not the greatest. Prices under the 21, under the 50. And then we eventually got the hourly sell signal. So for today's expiration, I've got the call credit spread up here at 4,400. I went $10 wide, so sold the 4,400, bought the 4,410. And then from there, it's a pretty straightforward trade. In a perfect world, we flush towards 43.70. Trying to catch a flush down towards the hourly 200. I would cover the trade if we're getting frisky back above that 4,400. So that's the trade as far as the 1K per day goal. And then squeeze action. So take you guys to a couple of scans here. And for what it's worth, no emphasis here on bullish or bearish. So no buy signals, no sell signals. Just what's squeezing. Show me what's in a squeeze, and then we can kind of take it from there. So for the weekly squeezes, a couple big dogs. Microsoft, Amazon, Nvidia, Tesla, the S&P 500. So mama market herself. Baba, just whatever. AMD, and then QQQ. So QQQ, AMD, the S&P 500, Tesla, Nvidia, Amazon, Microsoft. Bigger squeezes in some of your bigger names. And then if we got my sister-in-law texting me to make sure it's on an emergency. I can't believe we're going to Florida. All right. All right, now take it down a notch. Down to the 3-day. And for a lot of these names, this is where the nested squeeze magic starts to unfold. 3-day squeezes, Microsoft, Google, Amazon, Nvidia, Meta, Tesla. Who else? Adobe, AMD, and QQQ. So most importantly, QQQ's got, at least up to this point, a double squeeze. Squeezing on the weekly and squeezing on the 3-day. All right, down to the 2-day we go. We are notching lower. 2-day squeezes, Microsoft, Google, Meta, Tesla, AMD. So a lot of these have a triple squeeze, a weekly, a 3-day, and a 2-day. And then a few little guys from there. Disney, Caterpillar. Not as sexy as the big tech stuff. And then one more notch down to the daily we go. And for daily squeezes, Amazon, Tesla, JP Morgan, the S&P 500, Costco, BABA, and then a few more. But again, most importantly, S&P 500, QQQ. Come on down, S&Ps. But QQQ, S&Ps, Tesla, Microsoft, Meta, Amazon, Google, Nvidia. It's your indices and your heavily weighted names squeezing across those bigger time frames. The magic that can come from that. Exhibit A would be the move we had in the market back in April and May. Now, mind you, I'm not saying, let's wake up here today and buy calls and everything. So I'm not really calling for, hey, these are going to fire to the upside, or hey, these are all going to fall apart and fire to the downside. What I am calling for is pay attention. When the indices, when the leading names give you that weekly, 3-day, 2-day daily squeeze, 2, 3, 4, 5 months later, however long it might take, eventually they're going to fire. First goes your daily squeeze, then comes the 2-day squeeze. You get that domino effect. As far as swing trading goes, buying the pullbacks, trading the squeezes, there's never a better time to do that, and do that aggressively. Lean into those calls, lean into those puts. You're doing that with bigger size. No better time to do that than when you're coming out of that big nested squeeze. Even better if you're getting that from the market. So back in April and May, daily squeeze fired long, the 2-day squeeze fired long, the 3-day, eventually the weekly. That gives us 1, 2, 3, 4, 5, 6. We're getting like 8 or 10 weeks where being aggressively long works really, really well. And what I'm calling for is with a little patience here, eventually it'll fire short, or eventually it will fire long. And on the the other side of that should be some really good swing trading. If anything, you're kind of seeing the ebbs and the flows of the market. And if anything, you're seeing the importance of the squeeze. 70, 80% of the time, we're not doing too much in a big explosive directional fashion. A little bit more chop, we're going up or going down. Where you get those big moments in time is when you have that squeeze. Squeeze prints. Squeeze fires to the upside. The reason swing trading has been a lot more difficult the last couple of months, in comparison to April, May, June, the squeeze came to an end. All right, party's over. You pull back, everything gets a little bit quiet. Now your brand new weekly squeeze. Eventually, it's going to kick off that next good round of swing trading. So things to watch here. Structure's okay, momentum's a little bit iffy. So kind of take it day by day. But with patience, watch your momentum indicators, watch your structure indicators. The earlier you can get a sense of which way that squeeze is more likely to fire, the quicker you can build up your position, and eventually the more money you can make, which is a beautiful thing. Okay, and then as far as earnings go, the party starts tonight with Tesla and Netflix, which you may have heard of each. So we'll take a quick look at Netflix. I don't want to touch that with a 10-foot pole. What I continue to like here about Tesla has got to be that weekly squeeze. She's a beaut. Big 3 score, 10 out of 10. It's an A+ setup. The thinking isn't so much, earnings comes out tonight and then boom, tomorrow morning, there's Tesla at 320 and the weekly squeeze is fired. The thinking's a little bit more, We've got good structure. We've got good momentum. We have compression from the squeeze. So long as you have that combo, Tesla does want to shape up for a push higher. So earnings tonight could be the the catalyst, could be the trigger that potentially gets that weekly squeeze going. Or earnings could be a bit of a dud, and then your pretty structure, the pretty squeeze kind of gets tossed out the window. And then Netflix here, actually a bit of the opposite. You've got Tesla for now shaping up to fire the squeeze long. Netflix looks a bit more like it wants to fire the squeeze short. Actually, we have fired the squeeze short. So structure is pretty busted. Momentum is no bueno. Maybe earnings can save Netflix. And then next couple of weeks, you got the Googles, the Apples, all the big dogs. So while we're waiting on the weekly squeezes, we're we're having, I don't know if fun is the right term. They're not the most exciting trades, but these weekly SPX condors have been a really good placeholder while we're waiting for a bigger swing. So mastery, folks. Like I mentioned, let me go check actually. So we're trying to buy back the SPX condor for 90 cents. We should get filled here at the open. So we're throwing on these weekly condors. The way I'm position sizing them, if we can collect 50% of the max profit, it's good for like a 1% return on the account. The baseline goal that I have is kind of like 2%. Doesn't mean I have to make 2% every week. Just means the average over the course of 1, 2, 3 years. At a minimum, I'm trying to clock in at 2%. Now the condor this week, where it's going to be helpful for us this week, we took a shot here on Micron. Today, Wednesday. We bought it on Monday. We took it off for a loss yesterday. If we can book the condor today, it's going to cover that Micron loss. So in that regard, it can be helpful as well. So I'm thinking today we'll probably do another one. First, we got to get filled on the exit orders, but if we do, take some of that cash, and then maybe flip into another condor for maybe Wednesday of next week. I'm kind of like in the 7 days till expiration. But that is it for my notes here, guys. I believe. Yeah, my futures trade, which let me take a look at here. All right, let me get a couple of alerts going. I don't want to fall asleep behind the wheel. But yeah, I'll turn things over to you, good people. Anything you want to look at, any questions, I'm here for it. All right, back below. So, Peter, I know you wanted to take a look at Costco. What do we got? I like it a lot, Peter. You know what I like about it a little bit more? They tried taking it down. Had that huge gap down to like 540. Momentum crossed. The structure got a little nasty. They actually finished that day with a buy signal, which to me just means there's demand. They came in, they spanked it. They were pretty quick to pick it right back up. So now your daily squeeze is perfect. 10 out of 10. Got a bunch of buy signals. You got a 3-day squeeze. You got a 30-minute. I like it. Now, where I think that trade's got a pretty good chance of working would be if the S&Ps could just even stabilize for a few days. The trade works even better if the S&Ps are pushing towards 4450. But Peter, I would think at a minimum, if the S&Ps can hang above that 21 EMA, kind of keep the ship keep the ship afloat above 43.50. I don't think you want to get long everything, but if they can keep the ship afloat, then I think names like a Costco, where the structure checks out, momentum checks out. If they can keep the S&P stable, I think anything that's an A+ setup should have a pretty good chance of working out in your favor. So Christian, what's up, Christian? We got Microsoft and Google. Yeah, they are coming up for sure. So risk for the Iron Condor is expiring Wednesday. So Christian, the whole thought process here with the Condors, there's the cost of entry, meaning when you sell the Condor, you have your max loss and your max profit. A lot of times I'm only looking for about 50% of the max profit. So on paper, the risk reward is really not that attractive. Like for example, on the SPX Condor, we're going to make about $100 per contract. The max loss was like 750 or $800. So I have to allocate, 7-8% of the account to make 1%. Just kind of doing simple math. The risk I'm a bit more focused on is not so much the max loss. And mind you, you got to be, anything can happen. So you could wake up to a 200-point gap up, a 200-point gap down. You're probably looking at your max loss. My focus is a bit more, if I'm going to get my 50% of max profit, so I stand to make $100. The way that I manage the risk is at any point during the trade, I'm gonna compare my open loss to that potential $100 profit, and that's the ratio I'm kind of focused on. So, meaning at any point on that Condor, if I'm down $500, I'm not loving that ratio anymore. I'm down 500 on the trade that I might only make $100 on. What we found is even on the even during the cases where the price pushes towards one of your short options, we've never had an open loss that was, 1, 2, 3 times bigger than the potential profit. I think the worst I've seen is the open loss has gotten to about, half of the potential profit. So I stand to make $100 per contract. The Condor is getting a little bit suspect, and I'm only down about $50 per contract. So I'm trying to strike that balance where, I'm using JC's quant pivots. So I'm trying to sell these options at a level where there's like a 90% chance they're going to expire worthless. But then I got to make sure if I'm wrong, if we're pushing towards my short call, we're pushing towards my short put, I don't want to get totally fleeced. That is a goal. So that's the same way I'd manage a Condor for Wednesday. There's the cost of entry, but then there's the management of the trade as far as how much do I stand to make, and if things get a little bit sketchy, how much am I currently down? Evan or Earl, I'm sorry, I don't got my contacts in. Crude oil. What do we got, crude? I don't have too much for you in crude here as far as advice for a big directional trade. Reason being, my big 3 score is 2. Best possible score for the Bulls is +10. Best possible score for the Bears is -10. So I'm not going to short. I'm not going to short a +2. But if I'm looking to get long, I'm probably going to go look at a Google where crude's a +2 and Google cranks out a +9. I like my edge as far as, hey, I'm going to get long here a little bit more in a Google than a crude. And, of course, it's nothing about Google versus crude. It's just quality of the setup versus quality of the setup. For me, crude's kind of at a spot where I'm going to watch it develop. To our benefit, we're finding it, right near that daily 21. So a lot of your bigger rallies and a lot of your bigger flushes, they tend to start at that 21. From there, I'm going to look for a little bit more edge. If I'm getting nothing but lower time frame sell signals, that might trigger the short. Vice versa for the long. All right, everything good on the YouTube. Crowd. Yeah, what's going on here with crowd? Good morning to you, Scott. Yeah, Henry called this out in the options room. I think he called it out the day before the big push. So listen, everything looks pretty good here, right? You're 9 out of 10. So your structure, your stack DMAs, momentum, everything checks out. Let me throw this up here. My risk, if I get long right here, my risk is 2. My reward is 0.4. And that's as far as average true range moves. My target here would be about $1.90, or would be about 190. And my typical exit for my swing trades is going to be a move back under the 21. So now imagine the risk reward if you're buying it back here. You're risking like a quarter of an average true range move to catch 2, 2.5, maybe 3. So in other words, I want to buy it on the pullback. If I can get it a little closer towards 180, now I'm on the other side of that risk reward equation. Let me think, like Costco. Costco's a little bit better as far as risk reward. I'm risking 1.2 to make 1.3. Which admittedly I don't love. Now, even though Micron didn't work, the trade that we took in Micron on Monday, if the market looks even decent, I'm pretty much going to take that trade every single time I get it. Now, granted, we lost the buy signals before the close, but Monday we had the buy signals, right? 10 out of 10. It was an A+ setup. More importantly, by buying it right near that 21, the risk was like 0.4. The reward was like 2 and change. As far as average true range moves, we lost about 20-25% on a trade where, had it worked, had we pushed towards 74, we're looking at a double. So I only want to trade my A+ setups, but that's where I got to take the entries. Costco is an A+ setup. But if I buy those calls right here, my loss down there at the 21 EMA, it's not going to be 20-25%. More importantly, if I buy those calls up here, my profit at 590, it's probably not going to be quite a double. I can trade it. Right? The indicator says look for your spot, but the spot, the entry, that's going to be a function of risk reward. At a minimum, I'd like to risk 1 to make 2. I can only do that by locking in an entry as close to that 21 as possible. The goal is trade setups where you have enough edge to the point where things in the right market should work more often than they don't. Meaning they can definitely produce a good win rate, but then manage them, guys. Trade them in a fashion where you don't need that good win rate. All right, so I'm telling you on Micron, if it worked, we probably would have gotten a double. It didn't work. We lost 20-25%. I don't need a 90% win rate to make that kind of trading work. I don't need a 60-70% win rate. Things to ponder. All right, futures just kind of hanging out here. Dollar is sketchy at best. All right, y'all, a few more here. Roosevelt, what do I think of shop? What do the pretty colors think of shop? The pretty colors would tell me be careful getting long. You've got Google out there at +9. You've got you got Microsoft's got a lot of things that grade out better than a -5. Daily squeeze, no momentum, and you're under a couple tricky levels here. Where I would be a bit more inclined to want to get long is if they could get it back above that 21, cross momentum back above 0, and then try to rebuild it from there. And I'd imagine shops probably got earnings coming up, like most things. Yeah, November 2nd. It is creeping up. Creeping up. Good morning, Anna. SRPT. And then I'll jump back into the essentials room. Indicator says -3. Now, -3 is not the perfect short. Like where it's just screaming, jump in, we're about to flush. But it's not the ideal long. You've got your squeeze. There's momentum's below the 0 line. You're under the 200, under the 50, under the 21. And then everything on the big 3 signals is pretty neutral. So as much as I love my squeezes, to me, these are always kind of tricky. So all the blue labels over here, that means that time frame has a neutral squeeze. There's a squeeze, but there's no big 3 buy signal. There's no big 3 sell signal. We have the compression. We don't really have any kind of edge to call for a push higher or a push lower. We know eventually the 5-minute squeeze will fire, the 15 will fire, the 30, the hourly. They're all eventually going to fire. It's at least on my indicator, until they lean bullish, until they lean bearish, it's kind of tough to try to call for a directional trade. So to me, the drill there is just wait. If I get a 5-minute and a 15-minute buy signal, all right, now I've got something to anchor to. I can try to see that push. All right, guys, back to the essentials room here. See what else we got. Andrew, so I think for Meta here, the whole question, big question rather, and kind of the big question for the market, is earnings going to be a non-event, or is earnings going to be a positive or a negative influence on these weekly squeezes? And that is, guys, the tough thing about earnings. Before the announcement, you can have the perfect structure, perfect squeeze, beautiful trend. I don't think you're going to get a better looking weekly chart than Meta. Like this thing's beautiful. Beautiful push higher. Pulls back to a 21 EMA. Like, perfect hold of support. Never loses the buy signal. Momentum never crosses below 0. All right, got the squeeze. You've got a daily buy signal, bunch of squeezes. Everything lines up here for that squeeze to want to fire long. From there, earnings is pretty much a coin flip. Meta might knock it out of the park. Blows all expectations out of the water. The forward guidance is just, amazing. Earnings might be the catalyst here to kind of light the fuse. It's a little bit like a pit bull on the leash. It may be earnings lets it off the leash. The opposite can certainly happen though. So my whole thinking here with earnings is, I've got a really good squeeze. And now I'm going to approach that, guys, like I would approach any other weekly squeeze. As long as that buy signal prints, I can trade it. Now, whether or not I can trade it right here, what's that going to be a function of? It's going to be a function of risk reward. My risk is 1.9. My reward is 0.5. Guess what? I want to trade it. I don't love the idea of trading it up here. Now take Tesla. The weekly squeeze grades out just as good as Meta. Check out the risk reward though. I'm risking 0.5 to make 2. The A plus setup, the 10 out of 10 says I can trade it. Risk reward tells me, can the entry allow me to trade it right now? How about Nvidia's monthly or weekly squeeze? Now Nvidia actually went neutral yesterday. So we'll see what's up with that one. Microsoft. 8 out of 8, right? No buy signal. You gotta go with the buy signal. Okay, now how about Google? Can I trade it? Yeah, 9 out of 9. Buy signals, I can trade it. Do I want to buy it up here? Risking 1.8 to make 0.7. I don't want to buy it up here. I had my entry 1, 2, 3 weeks ago. And there's the beauty of a good entry. If I'm buying Google for the weekly squeeze back there, I'm going to lose so much less. Putting aside a huge gap down. Even better, I buy it back here. We haven't even hit the target yet. My calls are up. They're already up nicely. We get a bit more of a push. We hit the target. And now I've got a big trade. Better yet, because I got a good entry, had I bought it back here, from here, if we pull back a little bit, I'm not going to trip. If anything, I'm probably saying, all right, Google, come in maybe a little bit more. I might buy a few more of those calls. Any pullback here towards 130, so long as Google has a weekly buy signal, I want to be a buyer of that dip. The best way that I can rob myself of that opportunity of buying that pullback is buying it up here. And then I get the pullback, and I'm taking all kinds of damage. I'm taking all kinds of heat. I should be sitting there saying, yeah, hallelujah. Now I can buy Google with a risk 0.5 to make 2 kind of entry. So day by day, we'll get through Tesla tonight. We'll get through Netflix, and then we'll see what is popping. But all right, guys, I'm gonna let you go here. For those of you in the Gold Room and the Mastery, I'll be live today at 10:30 Central, and then I'll see the rest of you here next Monday for pre-market prep on my my YouTube channel. I'll get the weekend video out probably on Sunday. And aside from that, guys, I wish you all the best of luck. Thank you for hanging out this morning, and I'll talk to you soon. Adios.